Want to understand what investment bankers do and how much they get paid? Stay tuned. Let's visualize a fictional company that is growing and expanding its business. Let's call it Graducator Inc. The first point of contact for the company will be a relationship manager from the corporate coverage team. An RM is the point person at the bank whose aim is to marry the needs of the client with the risk appetite of the bank by understanding the business and credit risks, anticipating needs, and linking the client with the right specialists. A sort of charismatic jack of all trades, if you will. For example, if Graducator wants to explore a new market like food and beverage, RM would connect the client with the bank's consumer industry expert to support this strategy. As an analyst or associate in corporate coverage, you might support relationship managers by preparing client presentations, conducting industry research, and coordinating meetings with clients and internal teams. Okay, now say Graducator plans to acquire a smaller restaurant business. The mergers and acquisitions team takes charge. They manage the deal, with analysts performing deep financial analysis to ensure it's beneficial. As a junior in M&A, your responsibilities would include deal structure modeling, conducting due diligence, and preparing valuation reports. Now moving on, the Graducator needs a large loan to support their ambitious growth strategies. As we've covered before on the club deals versus syndicate loans video, one bank simply can't provide them all this money alone. Here is when the loan markets team might step in. They structure the loan, distribute parts to other banks, and handle secondary market trading. As an analyst in loan markets, you might help with financial modeling such as cash flow modeling or scenario analysis, preparing loan documentation, and tracking market trends. Fast forward a couple months and the acquisition is completed, and as a result, the Graducator has some expensive short-term bank debt on its books in order to pay for it. The smart thing would be to convert this to a source of cheaper long-term debt. A good takeout option is to issue bonds to institutional investors that will have different risk profiles to banks in order to refinance some of that bank debt. That's a job for the debt capital markets or DCM team. DCM originators structure these bonds, analysts provide market research, and the syndicate team sells them to investors. As a junior in DCM, you would be involved in preparing pitch books, conducting market analysis, and assisting in the execution of debt issuances. Now, if Graducator keeps growing, it may want to take the business public, just like how Uber issued an IPO and took the company public in 2019. This is where the equity capital markets ECM team gets involved. They help structure the IPO while equity analysts ensure the launch is successful. In ECM, your tasks would include preparing financial models such as capital structure optimization, valuation modeling, or IPO pricing models. You may also be drafting prospectuses and liaising with lawyers and accountants. Up until now, what we have covered are some examples of event-driven financing needs. Of course, the Graducator can still seek support from the loan markets and DCM teams for more general corporate financing needs that aren't event-driven, such as capital expenditure like equipment purchasing or working capital financing. Now, for the flow-type business, this refers to activities that involve high-volume, repetitive transactions that generate consistent revenue for the bank. First, we have transaction banking, which is probably considered to be the least exciting of the products, but it does offer a good work-life balance. This team would get involved when Graducator needs to open some accounts to facilitate cash transactions, such as making or collecting payments, or they may have a large receivables book and they want to realize the cash they are waiting for sooner. As a junior in transaction banking, your tasks would involve supporting cash management operations, preparing trade finance documents, and analyzing cash flow data. Now, let's explore markets. If Graducator needs to convert currencies for international operations, they would speak to the FX desk. Here, the foreign exchange FX team comes into play. They help the client convert their dollars to euros, ensuring the best rates. The FX team handles high-volume, repetitive transactions, which generate consistent revenue for the bank through the spread between buying and selling prices. And if the Graducator decides to invest its surplus cash, the sales team processes the orders, traders execute the trades, and analysts provide insights on market trends and stock performance. As a junior in the markets team, you could be responsible for conducting market research, preparing trade reports, assisting with trade execution, and supporting foreign exchange transactions. You'd analyze market trends, monitor currency fluctuations, and help ensure smooth execution of trades. Let's pause there for part 1 and move on to the salaries. But before we do, in part 2 of this video, we'll cover some more areas such as credit, capital structure advisory, structured or project finance, loans admin, and KYC. Okay, let's get into what I know you really want to know, and that's how much do these guys get paid. And so let's sum up the typical salary ranges, expected working hours, and bonus ranges for these divisions. Let's take a look. If you don't want to miss seeing the next video, remember to subscribe and hit that notification button. And if there's anything else you'd like covered, drop it in the comments.